Hello, everybody. Jackson here from the Wealth Squad. Today we talk about how to prepare for downside risk, if at all, right? So, downside risk is basically trying to maintain your money, try to keep more money rather than lose it in a potential crash. Now, the SP 500, we have to look in the past longer than we usually do, right? Let's see truly what the index is made of, what this market is made of. So right now we're at all-time highs, the highest it's ever been, um, and you can see we've had like three mini crashes before this. We'll just call these mini crashes, and then you can see we had two great, huge giant depressions in our past, 21 or so years. Um, we haven't had that big of one just besides the COVID dump in March and February of last year. But, it was rarely typically fast rather than usually takes a while, right? You could see multiple years. This was in, a couple months. So you just have to look at it from that aspect. Maybe we are at near a market top. Um, the best way to prepare for something like that is simply, be sure you're invested and make more money in the meantime. What I mean by this is, let's say you have a easy payment of, you know, um, 500 bucks a month into the stock market, right? During the time that the market's at all-time highs, do you want to be buying more and more and more? You want to put that money and keep it invested while it grows, right? So it'd be like 500 one month, 550 another, 600 another. Do you want to work on that, or do you just want to make more money in case when it does fall, so you could buy more? So what this means is not necessarily to save it, but invest it in other areas outside of the general stock market. So you don't want to keep it in cash hidden under your mattress, but you also don't want to invest it with the other money. What you want to do is invest in some sort of, side hustle, a business maybe, or maybe some crypto. You want to invest in other areas that are not directly impacted by the stock market. Um, so I hope you understand what I'm talking about when I say that alternative investments. Maybe invest in knowledge with that money, but the more money you make, the more money should be invested, just not necessarily in the same basket. So I hope that makes sense. Um, and thank you for watching.